You know, I think we're all looking at the fact that we're in a 10-year recovery. We have almost record unemployment, low unemployment in the U.S. and in the U.K., and yet there seems no pressure from inflation. And this time last year, I think most people were expecting the central banks to raise interest rates. Now, actually what they did was they cut interest rates. And I think the central banks have adopted a much more accommodative monetary policy. The U.S. is taking that and driving a fiscal stimulus policy. And I think you'll start to see other countries like the U.K. begin to do that. And that's providing a certain floor, I think, to the economy, which is lending itself to more optimism in Davos this year than last year.
Well, I mean, part of the reason that happened, of course, is because we got the Fed and the ECB both back off the tightening strategies that they talked about, and the balance sheet's now expanding yet again here. So we got a reverse from both of these key central banks. Latterly, we've been hearing noises from the Bank of England that maybe an interest rate cut should happen in the UK. What do you think about that? Is there enough credit flying around in the UK? Do we need to see easier interest rates?
I think the futures markets are predicting some cut by the ECB, but I think the more important thing to watch is to watch the Prime Minister and...
You mean the BOE?
Yeah, the Bank of England, sorry. I think the more important thing is the Prime Minister and the Chancellor. I think, you know, the UK roughly has a fiscal deficit around 1% of GDP. I think there's going to be a very constructive program to invest more money and to increase the dividend as a percent of GDP, put infrastructure in, invest in Northern England and in the Midlands. So I think you'll have a much more fiscally robust 2020 than you had in 2019. And then you do have the fact that Brexit now is a certainty. We've got a trade deal to negotiate, but I think when you talk to major corporations and small businesses, I think there's a growing sense of confidence, particularly the economy begins to grow. Yeah.
Beautifully political answer, but you didn't answer the bit about the BOE. What you said was there's confidence, there's a massive fiscal stimulus coming down the pipe. What you didn't say was, what the hell are these guys doing at Threadneedle Street? They're going to kill us on the transmission, they're going to kill us on our NIMs as well. There isn't a banker we've spoken to, including UBS, ABN and Intesa yesterday, who thinks it's a good idea to cut rates. Say how it is, Jes.
Well, I think the effectiveness of even looser monetary policy is losing its grip as you get closer and closer to negative interest rates. You know, Barclays, we had a pretty good year in 2019. The UK consumers in pretty good shape, so our impairment numbers were quite comfortable. We grew our mortgage book. Yeah, it makes it harder to sail into headwinds of ever lower interest rates. And at some point, central banks across Europe have to look at the health or lack thereof of the European banking system and say, you know, do we need stronger banks to get the economy to go?
10 years ago.
Yep.
What are they doing? Where's the CMU? Where's the proactive thinking? Is Madame Lagarde the key here?
Well, there was a financial crisis of great proportion 10 years ago. The banks had a lot to do with it. I think the central banks are more focused on stability in the economies right now than the banks. They should start thinking, however, I think, about the profitability of banks, much like you see in the U.S. If you drop the European banking industry into the U.S. interest rate environment, you'd see quite an uptick in profitability.
Is the argument won over the investment banking business, do you think, now at Barclays? Do you have to stop putting up with activist shareholders telling you that you need to divest?
I think 2019 was a real pivotal year for us. We gained market share through the first 9 months of the year. The bank, for the first 9 months, return on tangible equity was over 9%, which is our target for 2019. We were the third largest debt underwriter in the U.S. in 2019. So yeah, I think there's a view that, you know, Barclays is here to stay as a bulge bracket investment bank. It makes us a diversified, universal bank. We're British. And we want to serve corporations and institutions around the world. So, and I think you do see our activists is pretty much pulled back, and therefore, yeah.
Is there a new shareholder fight coming over investments in carbon-related companies? I mean, this is part of the agenda here at the World Economic Forum this year. You are getting some stick over investments in carbon businesses. What are you going to do?
You know, I think all major institutions need to recognize and embrace the challenge that we have around climate change. Barclays feels very strong about it. We've signed up for the Paris Accords. We agree with them. We are investing heavily in in renewables. We have to think about the transition off of that hydrocarbon footprint. We will need hydrocarbons to a degree to keep the global economy growing the way we all hope it to be. But climate change is an issue for every board and every major corporation, front and center, and it's not going away.
What do you say to people who say we need to do this quicker? And again, there was this huge debate yesterday. You've got Mr. Trump talking about the doomsters. You've got Greta Thunberg talking about the speed we need to do it. Where does that put the key British companies and Barclays' view of them, the likes of BP, the likes of Royal Dutch Shell, the likes of the huge oil majors, which are such a huge income driver for the exchequer and for pensions as well?
You know, one of the things that I think Governor Carney has done well, and the team in the Bank of England has picked up, is to get the regulators involved, to build new models, to measure stress, to measure the impact of climate change. Before we finally settle on the speed of the transition and what the solution is, we need to understand the data better. We need to understand the facts on the ground better. And I think that the government is beginning to partner with business to do that. So we don't have a conclusive answer yet. I think we know the direction of travel, but a lot of work has to be done to understand really where we are.
We're not going to stop financing fossil fuel companies at this point until we have more clarity answer.
Yeah, no, I think you'll have to do some funding of fossil fuels for many years to come because you simply cannot generate enough renewable energy to fund economic growth to lift people out of poverty, which is one of the two goals of the Paris Accord.